Hello everybody, welcome to Monday Morning Must-Knows. My name is Merlin Rothfeld, and here are 3 important things to pay attention to for the upcoming trading week. Now, I always say 3 important things, but a lot of times I like to sprinkle on a little bit more. I'm probably going to give you 6, and if we're really lucky today, I'm going to just sprinkle on a 7th one right at the end as we cut out. So let's get started with the earnings calendar. Yes, I know, we skipped earnings calendar last week because there was nothing going on. This week, cue the music going, hallelujah. This is the mother lode, the deluge, the kickoff, like opening day in baseball, which we had this weekend. This is going to be the kickoff for earnings season. Now, you look at the screen here and you're going to think, 48 companies, Merlin? Really? What's all the excitement about? Hold on. Start things off on Tuesday. You've got CarMax and Albertsons. Oh, I know. You're super excited about that. My eyes are rolling with sarcasm. Now we'll move on to Wednesday. Here is where it all begins. JP Morgan and BlackRock kick things off. You've got Delta Airlines, Bed Bath & Beyond, Fastenal, and Infosys. Now, the important part here is in green, I'm highlighting all of the financial firms because on Thursday is the mother lode. We've got CitiGroup, Goldman Sachs, Morgan Stanley, Wells Fargo, U.S. Bancorp, Ally Financial. Those are just to name the major banks. There's tons of smaller banks reporting. Now, we also have United Health Group on the Thursday earnings calendar as well. So this is the kickoff. Why is it so important? Because over the past couple of weeks, if you've been watching XLF, the financial ETF, it's been tanking, it's been dropping, which might be a little bit of foreshadowing for these earnings going forward. Now, of course, earnings season, be careful. You really want to be kind of staying out of these securities because when earnings happen, it can go all over the place. No rhyme or reason to it, but it should create some nice waves in the market. Now, let's kick things off with the bigger macro pictures. That's right, we're going to start looking at inflation. Now, we've talked about inflation so many times in this program over the past few months, maybe the past year that we've been doing this, but it's still a persistent issue. Last week when Jerome Powell was speaking, they talked about how aggressive the Fed's going to be, and really the foundation for that was inflation. So this week we've got 2 announcements on back-to-back days for the U.S. markets. Let's start things off with the Consumer Price Index numbers, which are going to come out on Tuesday at 8:30 a.m. Eastern Standard Time. And here's the chart of it going all the way back into 2009. You can see that it has been aggressively rising over the past year, year and a half on the hard right edge. That's Tuesday. On Wednesday, we get Producer Price Index, which gives us an indication of what producers are paying to produce a basket of goods and services. Now, that number surprisingly dropped slightly last month on their reading. We'll see what happens on that hard right edge on our Tuesday and Wednesday session for CPI and PPI numbers. It's critical because as those inflation numbers continue to rise, it puts more pressure on these central banks to raise rates to fight inflation. Well, speaking of central banks, let's bring on a couple of them, maybe even go into 3 if we're lucky here today. We'll start things off with the Reserve Bank of New Zealand. That's right, New Zealand was actually more aggressive than the United States. They've been raising rates much earlier than the U.S., and they are now at 1%. That's going to happen Tuesday at 10 p.m. Eastern Standard Time. The important thing here is all of these 3 that I'm going to show you right now are up in the air. The expectation is generally that New Zealand will keep it at 1%, but they may potentially raise as well. So for anybody trading the New Zealand dollar, you might expect some volatility Tuesday night at 10 p.m. Now, we'll move on to the Bank of Canada, which on Wednesday at 10 a.m. Eastern Standard Time is coming out with their announcement. They're expected to stay the same at 50 basis points. And finally, the ECB, the European Central Bank, on Thursday at 10 a.m. Eastern Standard Time is coming out with their rate announcement, and that's expected to stay right at 0. Now, these are all expectations, but remember, the U.S. has made a statement last week with the FOMC meeting minutes that they are thinking about aggressively raising rates. We may not see only 25 basis point increase at our next meeting. It could be 50, and I've even heard some people say 75, which I think would be crazy. But right now, 50 is the expectation, 50 basis points for the U.S. at our next meeting in May. That would put pressure on the European Central Bank to raise, the Bank of Canada, the Reserve Bank of Australia or New Zealand, and the Reserve Bank of Australia. So all of these banks right now are feeling a lot of pressure, and going forward, this is going to create some huge moves in our currency markets. So for you Forex traders and futures currency traders, this is going to be some exciting stuff. Now, you think that we're done because I'm going to the title screen here to end things? I'm going to give you one more, but I didn't have time to give a chart. Retail sales numbers are also coming out for the United States on Friday. That will create even more waves. We'll see you next week on Monday Morning Must-Knows.